Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for the ISE webinar series. Today, I'm pleased to present Mike Tosaw, the Director of Education at the OptionsXpress. So, for those of you that don't know Mike, Mike is the Director of Education at OptionsXpress, and he has some very insightful material tonight. He's going to look at the U.S. dollar and relative to some other instruments. We'll look at the euro, EUI, and Mike has some really interesting thoughts. So without further ado, I would like to introduce Mike Tosaw, Director of Education at OptionsXpress. Mike, are you there?
I am here.
Great. Well, thanks again for joining us tonight. I really appreciate it.
Okay. Well, I would first off like to thank the ISE and Steve for letting me present on this topic. It's something to where the more research you do on it, the more things that you find in relation to the not just the correlations, but the currency markets in general. A lot of people, one thing, and Steve and I have talked about this on the road a lot of times when we've worked together, what a lot of people get blinded by is you feel that you're diversified in your portfolio, whether it's your trading portfolio or your overall portfolio, when you have some money in large caps, some money in small caps, some money in the mid caps, and that type of thing, but you have no exposure from on the different currency side of it. And one thing, you might actually have that exposure and not realize it based upon some of the stocks that you're involved in. But nonetheless, the point is that we're in a global marketplace right now, folks, and currencies are more important than ever. Now, I'm a huge fan of the option product, not just on the currency side of it, but on equities, on indexes, and that type of thing. But what I really like about the the option product is the fact that you get to define your risk. And the concept of doing spreads, of doing limited risk, diagonal spreads, vertical spreads, calendar spreads, or just buying and selling calls and puts, all of those concepts that we know about from the stock market side of it are available with currencies. So let's go ahead and take a look at a few things. Before we go any further, we do need to mention that options involve risk. We do recommend that you read the characteristics and risks of standardized options. It's available by visiting the link on the OptionsXpress site, or you can contact the ISE and they'll be happy to give you a copy of this document. But nonetheless, we do recommend that you read it so you can actually get a good feel of what options are really about if you have not done so as of yet. Now, in tonight's game plan, so to speak, I have a little bit of an athletic background, so I might use a few cliches tonight, so I apologize for that. Tonight's game plan, we're going to talk about some of the reasons to be aware of the different currencies and why you should at least have an awareness of it in general. Too many people in this business we see, and Steve can attest to this, people know exactly what the Dow is trading at, but they might not have a clue as to where's the euro, where's the loonie, where's the pound, where's the Swiss franc, how are those things trading in relation to the U.S. dollar. And the fact that you don't know that a lot of times can really harm you in certain ways with trading. Next thing we want to talk about are the correlations with other markets, and that's probably what we're going to be spending the most time on tonight. We're going to be talking about how the euro, how the ISE products, the EUI, the YUK, the SFC, the AUX, and all the different currency products on the ISE relate to the U.S. stock market. We're also going to get into how this relates to individual stocks, and I'm going to bring up a story from when Steve and I were traveling up in Canada a few months back, actually. We'll talk about that. We'll then talk about the products to use. We're going to show how you can actually trade these when you have an opinion on them. So let's say, for example, that you're bullish on the euro, and you think that the dollar is going to go down, the euro is going to recover. We'll show you how you can use EUI and execute an option trade to have that sentiment. And on the OX side of it, we're going to be showing on the OptionsXpress side how easy it is to trade these products. What's neat about these ISE options is the fact that you can trade these wherever you trade a stock option. So let's say you even want to trade these in an IRA, for example. Let's say that you have a portfolio full of bonds. Let's say that you're a long-term bond investor and you have some overseas exposure with your bonds and you're concerned with the currencies, or you at least have an opinion one way or another with the currencies. And let's say that you have some exposure and I'm just making up a country right now just for sake of simplicity. You have some bonds in Britain, let's say, and you're concerned that the value of the pound is going to go down. Well, one thing that you can do, because the pound would be paired with the U.S. dollar, one thing that you could do is just buy call options, for example, on BPX. The cool thing about the ISE options is that they're all dollar-based, so that if you're concerned about the foreign currency sinking, you can actually have some exposure to the dollar. Or you can go the other way with puts. And we'll talk about all that a little bit later on tonight. Now, in terms of the reasons to be aware, I don't want to talk just about the stock market correlation to the dollar and the currencies, because I'll tell you right now, there's really not much of one in all honesty. But I do want to show you some areas to where I found some interesting things as I was doing my research for this presentation. First one is oil prices. Recently, as most people know, or anyone that follows the market at all knows, oil is down around the $50 a barrel mark. Now, we hit highs of $1.47, wouldn't that be nice, $147 a barrel over the summer. So I want to show you on a chart how the oil prices have correlated with the U.S. dollar as well as in a euro-based setting. We'll also show how this is in correlation to gold, because gold is another commodity that a lot of people, I remember when Lehman made their big announcement that things aren't going so well at Lehman on that Sunday night a few months back, a lot of people were recommending that we flock to gold. Well, in that case, gold did not do very well since then. And what we want to show is there a correlation between the dollar and gold as well? And then we'll talk about actual values. One thing that you need to take a look at is, like, let's say and I'm just making up numbers, let's say the stock market goes up 10%. Does that mean that the dollar goes up 8%? Or does that mean that the dollar goes down 2%? You need to kind of have different values to look for the correlations to make it justified when looking for one. Now, let's talk about oil. Oil is actually calculated in dollars. So for people overseas, when oil was up in the 140 range, it really wasn't that big of a deal to them because the dollar was going down so much that, yeah, it was maybe a little bit higher to them because there was just such a huge run-up in the price of oil, but compared to what it was like in the U.S., it really wasn't near as big a deal to them. So that's one thing that you need to understand whenever you're looking at commodities as an example. As we said earlier, oil hit all-time highs this summer at $147 a barrel. Now, that's really something else when you think about it, because I'm not sure where you're listening from, but I'm in the Chicago area, and it was actually, my wife and I have a minivan, and we filled it up the other day. It was $35 to fill it up. And I remember last summer when we were going to fill it up, and it was easily $75 to $80 to fill up that minivan. So, I mean, we've really come down quite a bit in this time frame. Now, volatility is another issue that exists with this. If you look at the implied volatilities right now, not only with oil, but with everything in the marketplace, from oil to the stock market to the treasuries to pretty much anything that's tradable, volatility is very high right now. Now, one thing with volatility, it's a measurement of uncertainty in the marketplace. And a lot of people felt that, around the time of October, that volatility was high and that vol would come down quite a bit. Well, it really hasn't. Volatility has actually gone up very significantly since October. So a thought on volatility, everyone always says, well, what is high volatility? What is low volatility? Well, it's kind of like the measurement of a stock price. Some people felt that Google was too high at 300, then Google went to 400, then Google went to 500. Well, eventually Google hit its peak and came back down. Now, is Google low right now? Some people think, yeah, Google's a great buy right now. Other people think, no, Google's going to go down even more. So in terms of what is high and what is low with volatility, that needs to be your opinion.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.